वो कहाँ है?
Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. It's a strong start to the May series. The Nifty trades above the 10,700 mark. Banking stocks lead the gains. PSU banks rank among the top gainers on the index. The Nifty PSU Banking Index is the top sectoral gainer for the day, snapping a 3-day losing streak. Technology stocks see some profit booking after a strong surge. The Nifty ID Index is the only sectoral laggard. And Reliance Industries will be reporting its fourth quarter numbers later today. All eyes on the contribution of its telecom vertical, Jio.
Well, the big boy is certainly doing well ahead of the numbers, I must say. But first, the index, which is doing extremely well, trading in or around the highest point of the day. We are actually at the highest point of the day for the Nifty. Similarly for the Sensex, similarly for the Nifty Bank, up about 1.5%. But who would have thought when we are at 9,900, that in a series time and a day post the series, we'll be at 10,700. It's been really strong movement, and banks are now starting to participate. A bit of a catch-up that we're seeing here. The heat map, a fair sprinkling of green on the screen. You would see pockets of red, yes, but a fair sprinkling of green on the screen, and save for technology and to an extent maybe Coal India. I think I saw Coal India somewhere. Yeah, Coal India is down about a couple of percentage points. But save for the IT space and defensives, we actually have a lot of stocks doing well. And needless to say, it's banks which are ruling the roost. So on the large cap end, you see ICI, SBI, Axis Bank up about 8%. It needed Yes Bank a good quarter to have an 8% gain. It took Axis a bad quarter but positive commentary to get an 8% gain. Reliance Industries about 3% higher as well. So the market breadth very positive. What's trending today? That's the key question. And a clutch of names which are either trading at 52-week highs or trading very positively in the session today. We spoke about banks. Even PSU banks have had a really good run today. So a BOI, Union Bank of India, Canara Bank, some very strong gains that have come in to the PSU banking stocks in the session today. You also have some of the alcohol liquor-based names doing rather well. So United Breweries is up about 5%. Pioneer Distilleries up 20% in the session today, and some gains that we're seeing for some distilleries as well. But it's essentially United Breweries as well as Pioneer Distilleries which are doing very well for themselves. Stocks which are trading in and around the new highs include a KDDL, include an HIL. Pidilite has just come off from the highs of the day. But a bunch of stocks out there which are doing so well, and technology has had a bad day today. So it's not just the large caps, the mid caps and the small caps as well. So L&T Infotech, Cyient, NIT Tech, all of these have come back in the session today. But I'm guessing the FNO screen is peppered with what's happening to the banks.
That's right, Neeraj, and what a move, as you rightly mentioned, for Axis Bank, which is now the top gainer on Nifty. It's been a great start to day one of the May series. The India VIX is now below the mark of 12, so that's also a positive sign. In fact, Nifty has reclaimed its level of 10,700 for the first time since February 5th. Remember, February and March series were not so good for the markets, but clearly 10,700 was a level which most of the technical analysts have been talking on our show, that once it crosses that, probably the momentum could continue on the upside. Well, fresh long positions have been seen for both Nifty futures, as you can see on screen. Open interest is up 7%, but it's a day for banking stocks. Pull up Bank Nifty futures and look at that OI build-up of nearly 22% as we speak right now. And Bank Nifty is up 1.6%. Your biggies like ICICI, SPI, all of them have been contributing to the gains today. From the options data, out of the money call strikes from the likes of 10,900, also the 11,000 call strikes today have seen some bit of build up. The 10,900 and both these strikes have actually added between 6 to 7 lakh shares. A huge amount of put writing has been seen today. The 10,600 has added nearly 10 lakh shares. Also the 10,700 put strike, a level which has been surpassed now, has added about 8.2 lakh shares. Remember, the maximum OI concentration for the series is at the 11,000 call and the 10,500 put, and probably that's the range that we will be watching out for this series. In terms of stock futures, United Breweries is having a really good day. It's gone up on high volumes and cashed, so definitely watch out for the delivery data here. And also the stock's approaching its 52-week high of 1243. So good going for United Breweries, 26% higher for open interest. That tells you there are fresh long positions seen for this one. Axis Bank, your top gainer on Nifty, up on very high volumes on the cash side, and this one too, definitely watch out for the delivery data for this one. Fresh long positions have been seen for the May futures. If you look at the OI build-up for the May futures, that will tell you that the traders are betting for this one 25% higher. Looking at the valuations too, it's trading at 1.6 times its price to book for FY20.
Well, strong gains there. Let's try and now focus on the key stories of the day. Axis has come and done what it was supposed to do. Aside of Axis, there is, of course, Reliance, which will come out later today, Maruti and UPL, which will come out any moment from now. Yatin Mota and Yash Upadhyay are here to talk about Maruti and UPL, which will come out during market hours. Yatin, let's start off with you first. What's expected from Maruti?
Well, Neeraj, if you look at Maruti Suzuki, a 22% growth in profit and a 28% growth in the operating profit is what we are expecting. Of course, this time there was a double-digit strong volume growth, and more importantly, in January they had a good price hike of 1 or 2% on an average on most of their products. So that will be clearly supporting the top line as well as the realization growth. Of course, the discrepancy that you see in the profit growth and the EBITDA growth is to do with the fact that there might be lower other income as well as higher tax outflow, because of which the profit growth could be slower than the EBITDA growth. And also, few factors that could impact the, margin growth would be the appreciation of the yen, and that might lead to higher royalty provisioning. And that is one concern that, we could see as far as the overall operating margin performance is concerned. But apart from the earnings, do watch out for the management commentary on new launches, the update of production ramp up at the Gujarat plant, and also, what is the outlook as far as the Toyota as well as Suzuki partnership in India is concerned, because the management commentary there will be important to watch out for.
Stay on, Yatin, because Maruti is just about come out. So, Yash, you'll have to just wait for a bit, or maybe Yash, mic off, because Maruti numbers are, as I'm told from the buzz in the newsroom out, we'll just talk about them in moments from now as the first numbers hit on your screen. Remember, the profit expectations vary from a bunch of brokerages. Okay, standalone net profit, Yatin, it's lower than what we were working with. I think 1880 crores, if I'm not wrong, is the number that is flashing on your screen. Let's wait and watch. But Yatin, I would believe this is way, okay, Yatin will just join us in moments from now. But at 1880, this is way lower than what we were working with.
Yes, Neeraj, we were expecting a figure of almost 2085. In fact, we were also looking at some sort of margin expansion to come by. So very important to see what's the operating performance this time around. The volume growth of 11% year on year was something which was supposed to drive the revenue figure this time around. So we'll get you the top line figure as well. But as of now, the bottom line definitely seems to be on the lower side. And very importantly, I guess in the morning, Yatin was highlighting, some sort of commentary to come by on the royalty front for this one too. So Maruti Suzuki, just with that profit number which we have right now, we've seen the stock also slipping because the number is below what the street was estimating.
Yeah, well, they set high standards for themselves for sure, and the volumes numbers were known. So I don't know if there are some anomalies that have come into play here. It'll be important to see what the EBITDA number is looking like, whether it's 3282 crores or lower than that. You have the numbers, Navi?
Yes, Neeraj. I'm looking
what's the revenue?
Standalone revenue. It is the sale of products is 2059. We were looking at 2097. So that's just about in line. But the total revenue from ops, which includes the other operating revenues as well, that's coming at 2116. So as of now, it looks like the top line seems to be in line what Yatin's poll was actually throwing about. But some other key factors, we already know the profit figure by now. Profit for the quarter. Okay, the numbers are actually in million, Neeraj.
Yeah.
So 20594 is the sale of products, and the total revenue from operations is 21165. So the top line is definitely in line, which has been driven by the volume growth, which Yatin had highlighted in his preview as well. What has gone up on year-on-year basis, I'm just trying to look at the numbers. It's the cost of materials consumed. That appears to be on the higher side. Also, finance cost, 273 versus 2.2. on year-on-year basis. So finance cost, Neeraj, is definitely on the higher side. I don't know if that's impacted the bottom line this time around. The other expenses too appear on the higher side. I'm just looking at the operating level expenses. So finance cost, other expenses do seem to be on the higher side.
Yeah, so add back the finance cost to the EBIT number, PBT number, and therefore I would guess that the margins won't look so bad. But let's wait and watch. Let's give some leeway. Let's get in Yatin in a bit to talk about that. Let the number flash on your screen. Standalone EBITDA is at 30-15 crores versus our estimates, which were lower than that. So the EBITDA numbers seem to be much better, or no, actually seem to be in line with what we were working with. Avinash Gorakshekar of Jointer Capital with us. Avinash, thanks so much for taking our call. What's your initial thoughts? The reported PAT number seems to be lower than estimates. Just waiting for the EBITDA numbers to come out.
Yeah, I think, Neeraj, we were looking at a bottom line of around 2100 to 2200 crores. I think bottom line is definitely a miss, but top line is in line. And I think, EBITDA margins anywhere above 16% would be definitely be a kind of a positive sentimental booster for the stock. I think EBITDA margins are a key. I think compared to last time, 14.6. If the margins are 16-odd%, that would be a good sign. But overall, I think interest costs going up for a company like Maruti.
Avinash, standalone margins are at 14.2%.
14.2. So I think, Neeraj, this definitely is not a good sign because, we were working with a margin of at least 16% plus. So I think one would like to know, what has been the reason, whether it is raw material costs or whether it is some other one-time cost. But overall, I think this margin picture definitely looks a little below expectations, which not only from our side, but even the street was expecting.
Well, actually, Neeraj, the operating performance has been below estimates. The sales volume are up 11%, which the street already knew. The sales are up. The net sales is up 14%. PAT is up only 10%, which is once again below what the street was estimating. The PBT also is up only 15%.
Other expenses, Navneet.
Other expenses, that's what other expenses seems to be on the higher side. And also, I think we'll have to check cost of materials consumed as a percentage of sales, and then only we'll get to know whether there were some cost pressures which were felt during the quarter or not. But clearly, it is the other expense. I don't know if they give the breakup in terms of advertisements.
No, but it does seem to be the case. The cost of material consumed, the sale of products hasn't risen as much, but the cost of materials consumed certainly has. I would guess as a percentage even that's hit. Is Yatin with us? Okay, Yatin, is Yatin with us? Because then we should try and go to Yatin first and then get in more comments from Avinash. Yatin, what have you made of these numbers?
Neeraj, prima facie, the overall, EBITDA margins have been much lower than what we were expecting. Of course, the higher finance costs have eaten into the profitability. But if you look at the normalized EBITDA, that has been clearly, impacted. Now, if you look at if you compare it on a year-on-year basis, the employee costs have moved up by 60 basis points. The other expenses of the company have moved up by, 1 percentage points on a year-on-year basis. That have impacted the overall margins. And if you look at the, depreciation bit, we were expecting it to be slightly higher given the fact that the yen had appreciated. But nothing of that sort has happened. So if you look at the overall performance, the company in its presentation said that adverse commodity prices have impacted the overall margin. So at this point in time, it's clearly evident that, of course, the other expenses are also high, but also the commodity cost or the cost of raw materials has increased significantly for Maruti, and probably that has hampered the overall margin. So if you look at it from a sequential basis, we are looking at a 150 basis point kind of a decline which has happened. And our Bloomberg Quint poll was suggesting that we could see margins close to 15.5%, and they have delivered a margin figure of 14.24%, which is much below what the street was working with.
Well, actually, that's being reflected in the numbers. Avinash, the finance cost too has gone up on year-on-year basis, which has dented the bottom line. And the press release now clearly tells you why the operating performance is below the street estimates. They were taking some measures to control the cost, but that's been offset by higher commodity prices. Do you see this trend continuing in the subsequent quarters as well?
No, I think my sense is, the trend in commodity prices, especially for the raw materials, is something which would possibly take duration of at least one more quarter before we see decent price increases which could compensate these raw material increases. But the interest cost increase, Navneet, is little surprising considering that, Maruti is a debt-free business. And for them, interest costs actually normally seem to be quite negligible. So, it's going to be the raw material picture which could possibly take a little more than maybe a quarter to stabilize. But I think going forward, even the June quarter should be a little, marginally depressing for the margins. Post second half of FY19 should be a lot better when we could see a combination of volume growth and price increases actually kicking in.
Has the stock price factored in too much too soon, Avinash? After a really good run post demonetization, it's been in a bit of a lull in the last 3 odd months at least, if not longer. What do you do with Maruti? And I know it's a great stock to own. My question is from here, looking at the numbers, are there better stocks in the auto space to bet on, or would you bet on Maruti?
No, I think, Neeraj, within the auto pack, I think Mahindra could be a better choice considering the fact that, operating leverage for them for the farm equipment business would definitely be stronger. So I think Maruti definitely is a solid stock to hold on. But in terms of the price reward, I would definitely like to, shift out to, say, a Mahindra and Mahindra, where possibly you could see a better kind of risk reward, in the next, say, couple of quarters.
Okay. Yatin, you have any questions?
No, Neeraj, I just wanted to flag off the point that the company in the release has mentioned that higher advertisement costs as well as higher commodity costs have impacted the overall margin performance. More importantly, also we need to understand one thing, that as the production in the Gujarat plant moves up, the overall cost also moves up, and probably that is the reason why we are looking at some impact of that as well. So, these are 2-3 factors which have impacted the margin. Of course, the management commentary on how really will these expenses shape up moving forward is something important we will be watching out for, because I was reading one of the analyst notes and they clearly mentioned this fact that once the Gujarat plants start ramping up and more production comes in, probably the overall costs for the company would move in as a percentage of overall sales, and hence that blip in the overall operating performance is what we could see moving forward.
Is it normal for an auto company, the ad expenses for them going higher in the fourth quarter? I'm sure it's year-end, so they would also want to meet their targets. Yeah.
So, Navneet, what usually happens is that in this period, we have seen new launches coming up, especially the new Swift Desire. They have a couple of new products coming in. Also, 2018 was the start was supposed to be good for the festivity. We had the Navaratras somewhere in middle of March, and probably at that time the company clearly comes out with a lot of promotional events, promotional advertisements, and probably because of that we could have seen some bit of higher expenditure on that front.
Okay. Yeah, thanks for putting that into perspective. 146 points off now for a Maruti Suzuki. 80 rupees is the dividend that they will pay, is what they have said too. So keep an eye out for that as well. 1.6% lower. Avinash, take a moment to thank you for joining in today as well. Really appreciate you taking the time out and speaking to us on Maruti numbers. Avinash Gorakhshekar likes Mahindra and Mahindra over Maruti Suzuki because he believes the operating leverage will play out very well for M&M or Maruti Suzuki over the near term. So do watch out. But Maruti numbers slightly below estimates. Revenues seemed okay. Margin performance slightly lower, and consequently the bottom line performance as well slightly lower. Not to say that this will not move up or can't move up after Axis. Yep. We're not betting on anything.
No, actually the press release also stated, like Yatin highlighted, it's also the adverse movement that has been seen in the currency. Now, if rupee continues to depreciate further, so I don't know if that's going to impact more in terms of their P&L account that we've seen this time around. But overall, Neeraj, if I remember, towards the end of FY17, the management had given a guidance of margins of 15%. They've also been very conservative while giving any sort of guidance. So it's just been a tad below for FY18. I think they've been able to meet that at least margin guidance of what they'd given towards the end of FY17 of 15%.
I guess the street just loves Maruti and therefore preempts that whatever they are saying, Maruti will do a bit better than that.
The stocks run up too much. Let's also, factor in that.
Well, let's wait and watch what happens on that. How do the futures behave, Navneet? Any thoughts on that Maruti futures? I mean, I would have thought that by virtue of this announcement and the numbers thereof, have we on the dividend payment thereof as well? Maybe there could be some activity. 8,800.
Futures are still trading at a premium, I guess. Yeah, 43 points premium. So still 8% higher. But Neeraj, that's clearly telling you that some bit of fresh short positions are being taken at current levels because the open interest is also going up. And let me also highlight the premium is actually fluctuating. So if the premium goes lower from the current levels of, let's say, 40, 45, that may not be a good sign, which will actually tell you you that at every higher level, probably traders would look to short Maruti Suzuki futures. As of now, open interest is up nearly about 8% for this one. So clearly, top line was in line, but other parameters have been below the street estimates. Be it the operating performance, finance cost has been hampered due to higher finance cost, which Avinash highlighted was pretty surprising. It's a debt-free company. Let's find out if in the management commentary if they comment on this front or not. But moving on, I think we've got the management of CMI.
Yeah, I'm told they are with us. Remember, it's a cable. The cable industry has seen a strong surge in demand in the recent past. And Edelweiss came out with a very interesting note that predicts that the capacity utilization for CMI, by virtue of the acquisition that they've done in Baddi, would move up because of the new order flows that will come in for the company. Let's get in the management. Mr. Amit Jain, he's the CMD of the company, joins us right now to talk about what the company is about and what could the near future be like. Mr. Jain, good having you. Thanks so much for joining in. For people who don't know about your company, can you tell us about the nature of the business that CMI indulges in, Mr. Jain?
Yeah, thank you for calling me.
Pleasure.
And giving me a chance to represent myself. CMI, we are basically cable manufacturers and broadly in the specialty cable segment. We make customized cables for different departments like railway, BHL, EIL, oil refineries, and ISRO, metros. There is a illustrious list of our clients, what we have. Recently, we acquired a plant of General Cable, which was a Fortune 500 company. They were shutting down their operations in Asia Pacific region, and we got an opportunity to acquire their Indian operations. So, with that acquisition, our capacity has now almost quadrupled to what we were having earlier. And going ahead, we are trying to ramp up the capacity in the best possible manner.
Okay. Two questions roll into one, Mr. Jain. Would specialized cables typically carry higher margins? And part two of my question is, am I correct in assuming that the growth for CMI over the next 3 years, or CMI as a story, is essentially a story of capacity ramp up and higher capacity utilization over the next 3 years?
Yeah, that's right. As a specialty cable manufacturer, since it's the requirement of the purchaser, so they better margin.
A slightly patchy line with Mr. Jain. Maybe we can try and connect him with him on a landline, because this cell phone number line, it seems to be a cell phone line. It's not turning out all that well. Let's wait and watch. The Edelweiss note, Navneet, for example, spoke that their capacity utilization levels in the Baddi unit which they acquired, that management was saying, yeah,
they got it at a very good price.
Very good price.
I think it was from General Cable. It's an MNC which was shutting down their Asian business in hurry, and hence they got it at an enterprise value of nearly 92 to 96, which is actually below the cost they sold it to them, and they've been able to turn it around or not. But the trigger for the stock, which Edelweiss has stated, is a ramp up of capacity, because Faridabad is already operating. That plant is operating at 100% capacity utilization. If they're able to increase the capacity, that will definitely augur well for the return ratios.
Well, let's wait and watch. We'll just get the management back in moments from now. The assumptions also are that if indeed the okay, I think before we get into the assumptions, I'm told Mr. Jain is back with us. Mr. Jain, can you hear me?
Yeah, I'm loud and clear.
Okay, great. We can hear you as well. So, sorry, I was asking you about whether your story is a story of a higher capacity and higher capacity utilization over the next 2 years.
Well, it's not necessarily higher capacity utilization. The thing is, we are in a various vertical of cable manufacturing, wherein we cater to telecom, railways, BHEL, instrumentation, then power segment, extra high voltage power segment. We are having different verticals, wherein we have created at our existing plant, we have a capacity which is fungible for all the sectors. Now, what we have is we have acquired a plant which is state-of-art plant built up by General Cable. They are the pioneers in cable manufacturing in the world. So that plant gives us a huge opportunity to increase our capacity, and with the increased capacity and the increased product profile, that leads us to higher capacity utilization and with the better margins than our peers.
Mr. Jain, if you could tell us how much revenues are you looking to do from the Badi plant, say by FY19, and I believe for FY18 you've already done, or you're likely to do almost 250 crores?
Yes, around, in Badi plant we have somewhat achieved a capacity of 20-25% in FY18, and we expect that this thing will go up in next 2 years. We may reach a level of 60-70% by FY20.
Okay, could you translate that for us in terms of revenues? How much can you do? Because from Faridabad, you're doing currently somewhere about 280 to 300 crores.
Yeah, that's right. From Faridabad, we have been doing 320 odd crores. This is the maximum capacity what we have in Faridabad unit. And going ahead, we have a capacity of say 1,000 crore in Badi.
1,000 crores in Badi. Okay, I just want to talk about the few concerns which have been. Sorry, Neeraj, you go ahead.
No, just that number conversion. So I was just wondering that if the total capacity is worth 1,000 crores, you are currently at about 25% capacity utilization, which would mean sales of about 250 crores if all of them are getting absorbed.
Yes.
If you're saying that you will reach about 60 to 70% capacity utilization, Mr. Jain, in 2 years, I would presume that means you would have sales of about 700 crores from the Badi unit, and the Faridabad unit would probably continue to do about 300 crores. Are you saying that you could actually reach revenues of close to 1,000 crores by FY20?
That's what we contemplate. This should happen. This is what our plans are.
Okay, 1,000 crores of capacity of revenue is likely with the capacity utilization of 60-70%.
Right.
What would that do to your operational performance, Mr. Jain? From where you are right now with the higher capacity utilization, would your EBITDA and EBITDA margins improve, or do you believe your EBITDA margins would consolidate at the levels that they are at right now?
We expect good improvement in our EBITDA margin, but it may not be 4, 5, 10%. But yes, it will be better than the industry average, and it will be a reasonably good EBITDA margin because of the economy of scale what we will have after achieving that turnover. And a lot of our fixed expenses which are now spread for a small turnover, that will be spread out on a larger turnover.
So if you go to about 1,000 crores, and which is almost doubling your revenues, nearly doubling your revenues from the current year, and if your EBITDA margins improve, is it safe to assume that from the 32 odd crores that you will likely clock in FY18, you could nudge on the bottom line numbers close to 60-65 crores? Is that a safe assumption?
Yeah, we expect that those numbers.
Okay, fair call. And your return ratios would improve as well. I just have one small, because we are on the topic of numbers, Mr. Jain. The one note that we read mentions that your return on capital or return on assets could actually nudge up to 18-19% in FY20. Is that a distinct possibility? I was just looking at some of your larger peers or companies which are your peers but having slightly higher sales. They are also trading at about 16-17% ROCE, ROA. You think you will better that?
Yeah, definitely. With the expanded turnover and the better capacity utilization, these things are bound to happen.
Interesting.
Okay. Mr. Jain, the key concern for a business like yours, since you're getting orders from railways, is the high cash conversion cycle. Correct me, it's somewhere about 100 to 120 days. And also the other factor which has been impacting the bottom line is the higher finance cost. If you could tell us that will the cash conversion days continue to be the same in FY19, FY20, and B, with regard to the finance cost, which I presume its majority of it got to do with the working capital, if you could break up your short-term and long-term debt for us?
Well, as far as cash conversion is concerned, for the 90-20, since we are on a high growth trajectory, so that those numbers may not be that good. The cash flow would be there, but not that positive as is expected, because locking what we are talking about a turnover of increase of 50% for the next 2 years. So that numbers may not be good, may not come that way. And as far as the financial cost is concerned, we have a long-term debt of around 40-45 crore odd rupees. Rest is the working capital, as you have rightly said. And typically in our kind of industry, with the government involved and with the contracts involved with the majorly supplies going to public sector undertakings,
targeting your revenues of 1,000 crore and you majorly your working capital is coming via short-term debt, then that finance cost will continue to be higher even in FY19 and FY20, because that's the one which is actually capping the move with regard to the growth that one is seeing for the bottom line.
Well, that will be there. The working capital requirement will be large as we go on. And gradually with the increased cash accruals, going after, say, beyond 1,000, that level will come down significantly.
Okay, just one last question from my side. I think 23% of the promoter holding has been pledged. If you could tell us any timeline when that holding will be released? When that pledge will be released?
23%.
Sorry?
I think the figures are not correct.
Out of the 43% promoter holding, I just checked from the exchange's website.
Okay,
it could be wrong, you can correct me.
Yeah, of the promoter holding, right.
Yes,
right.
Of the promoter holding of 43, 23 seems to be pledged.
Fine. Numbers are okay. Yes, we have to have some short-term borrowings what we have taken. And they will be, I think, by this quarter end, they will be released.
In a quarter, you're suggesting?
Yes.
Okay.
That was just a stopgap arrangement what we had to do.
Okay, Mr. Jain, we wish you all the best. Thank you so much for taking the time out, and all the best with the quarterly results as well. I believe the results will be out in a few days.
Yeah, thank you, Neeraj. Thank you, Navneet.
Thank you. That's Mr. Amit Jain, Chairman and MD of CMI, cable manufacturer, hopeful of doubling revenues, doubling PAT, capacity utilization moving up over the next couple of years. Let's wait and watch if that happens. It's had a good 1 month, to be honest, though. 70% uptick in the last 1 month. Nothing to scoff at. Good going for CMI. Let's get in our technical experts on board, because it's good going for the markets at large too. Hemen, Kapadia as well as Manav, Chopra. I need no introduction. Both gentlemen join us on the show. Gentlemen, both of you, good afternoon. Thanks so much for joining in. Tempted to ask about CMI, but we'll ask about the bigger news first, and that's the markets. Hemen, let's start off. Well, you were bullish. It's turned out well so far, from 10,700 or 25,400 on the Nifty Bank. What do we do here on?
Very good afternoon, Neeraj. Thank you for having me. I think 10,702 to 10,736 was what we spoke about, which I was expecting. That was a gap. We went to 10,720 in spot, Neeraj, today, so we've come there. Frankly speaking, everything is fine. There is market breadth across the board. My only fear, if any, is we've seen, okay, we'll have to wait for the end of the day, Neeraj. I think probably Navneet will agree with me. We've seen significant open interest addition. We started the series with 2 crore 21, 2 crore 22 and 21 lakhs for the Nifty. And now we've gone to 237 and 25 for the Nifty approx. So if you're going to add so much of open interest after 650 points on the upside, and we're up to the gap, I am not sure how to look at this from an analytical point of view. Individually, stocks, a lot of them are doing good. No, there isn't a problem. We posted a 2-month high, higher tops, higher bottoms, except this open interest addition at this level, which makes me slightly uncomfy. Things are okay. Neeraj.
But your call on writing the 10,300 put of May seems to be working.
Yes, Neeraj, but yes, Navneet, I have a feeling now maybe one can, book profits, because we've come to this bearish gap, Navneet. We've spoken about it multiple times. Right. So it's not at the end of the world, but we've come there. So, I mean, I'm not sure. A small cool-off went, one could not participate. And now, once again, like I said, the open interest addition, we'll have to wait at the end. No need. That's my concern.
Let's see if there is any sort of unwinding which takes place towards the end. But, Manav, are you looking to buy Nifty at these levels?
See, at the current levels, one has to also keep in mind the risk-reward ratio. What I see is, 10,550 and 600 will be the positional support levels for the markets going forward. The only thing is that the markets have seen a sustained rally without any brief correction. So keeping that in mind, one has to have a positional support in mind. So as long as we trade above 10,550, 600 levels, I think things are still fine. There could be some sort of a short-term pause, but eventually, we can anticipate this move to extend towards the levels of 10,800 and even 10,900, which is quite likely. Keeping that in mind, I think the only trigger that could take the markets higher is the bank nifty, and looking at the breakout that we have seeing in the bank nifty today specifically, I think a close above 25,350, 25,400 on the weekly basis, I think it would open further gates of another 500 to 800 points rally on the bank index, and most of the PSU stocks which were in the deep oversold zone are bouncing sharply, and specifically SBI is forming a double bottom pattern. So I sense that at least for the near term perspective, the underperforming index would give some sort of a shift or a throttle for the indices going forward. So it's all going to be a very stock specific and sector specific allocation which is required, but overall, yes, maintain bullish bias. Nevertheless, it's also a good level to book some partial profits, but eventually I think 10,800 and 900 are the levels to look out for.
Wow. Let's talk about specific stocks. Manav, your strategies for the day?
Yes, my first buy call is on Tata Chemicals. The stock, after a brief correction from its recent high, has witnessed a breakout on the daily charts, and the volumes are also confirming the same. Overall, the trend for Tata Chemicals has been quite bullish. It has tested its long-term averages, and eventually we expect the stock to even exceed its recent swing high. So it's a buy with a stop of 725 for an upside target of 770. My other pick is buy on Minda Corp. Basically, the stock is consolidating near its long-term averages, and few days back it witnessed a very sharp rally. So after that sharp rally, a short-term consolidation. Looking at the overall formation, we are expecting this to break out on the upside. So at the current levels, it has a very strong support at 190. So the risk-reward ratio is very much in favor. Maintain a buy into this with a stop of 190, and we expect an upside target of 215.
Oh, technical calls now coming in on Minda Corp, which has had a great week. 215 is the target from Manav. Hemen, individual stock trading strategies?
I think suddenly everything looks pretty
hunky-dory.
Yeah, hunky-dory, absolutely. I'll start with Tata Motors. We've come down to 325, haven't closed below it, oversold, positive divergences by some of the mechanical indicators. Crossover buys just appearing. The two early, 3 early charts have turned, so one gets the feeling that Tata Motors can be a counter buy. 333 entry, stop loss 329, target 341. Second stock which looks promising, it hasn't delivered earlier. Hopefully this time around it does that. The Sun Pharma. We've been in this range between 490 and 525, 530 for almost 6 weeks now. The expiry is done. There was an open interest significant call writing at 520 in the last settlement, Now that's gone. So one gets the feeling it's on the cusp of a breakout. For formality, we need a close up of 525. So, but yeah, buy Sun Pharma with a stop loss of short target. Entry at 520, stop loss 515, target 530. A couple of days.
Oh, Neeraj, MRF has crossed the 80,000 rupee mark in today's trading session. It's trading with gains of 5%. I'm sure this wouldn't interest a couple of the retail investors because
you can't buy it?
No, not that. I think the liquidity, because of the kind of price, they really need a stock split, I guess. But it's gone up on good volumes. Actually, the volumes are higher than what one had seen in yesterday's session. I don't know what has triggered this move, but MRF is trading almost with gains of 5% above the mark of 80,000. It's also all-time high levels for this one.
Yeah, well, big moves on MRF, SRF, anything else ending with RF, let's see. But yeah, good going really for a clutch of these names. Anyways, let's get in Anand Tandon with his thoughts as well. He's market expert, joins us right now on the show. Anand, good having you. Thanks so much for joining in. Seems like markets are buying not just the good results, but the bad results too. It took Axis a bad number and some positive guidance to clock in what Yes Bank did in trade yesterday after some very good numbers.
Well, yes, banks are a different kettle of fish altogether, Neeraj, because people buy banks when they are doing badly, and they buy banks when they're doing well, because it's supposed to reflect the market, the economy. So if it does badly, one argues that, oh, economy will recover, and when it does well, then it's already doing well. So you can't really take a cue on the rest of the market, but clearly the market is in a bullish mood. And now that the near-term technical resistance that the chartists have been warning about has been taken out, I wouldn't be very surprised if you continue to get a rally from here on as well. But that said, the valuation comfort that one had kind of developed after the first 10% fall in the beginning of the year is now more or less gone. You're back to where it was. And, I don't think that the estimates for the next year are going to hold out yet again. So you would again begin to see a cycle which is downwards in terms of the earnings. It would be perhaps a good time to start taking some money off if you've been riding this bull run.
Okay, take some money off the table is what Anand is suggesting. Pull up PC Jewelers. Last 3 sessions have been really painful for this one. It's down 12% right now, 14% actually, almost at day's low. Pull up Indigo as well. It's at 14.20 and that's seen a cut of almost 5%, I guess. Indigo too seems to be almost at a day's low level. So Indigo is also seeing some bit of pressure for this one. I think the financial results, they come out on 2nd of May. So ahead of numbers, which is lined up next week, there seems to be some pressure for Interglobe Aviation. But Anand, if you had a chance to look at Maruti numbers, what did you make of it? Good top line growth, which was driven by volume growth of almost 11%, but some cost pressures felt, which dented the margins this time around.
Well, to be frank, I haven't looked at it in detail, but there was no doubt that the top line would be great. They've been reporting numbers month on month. The expectation was that the margins would be a little better actually, because the portfolio had shifted to the higher end cars. But broadly, again, there is very little valuation comfort in that. That said, the company continues to deliver sterling top line growth, and the volumes continue to remain market beating by very far. So from a portfolio perspective, for someone looking to track the index or do marginally better, certainly it would be something that you want to hold on to. But if you're looking to do great outperformance from here, I doubt very much you'll get it.
Interesting. Maruti's come off quite a bit from where it was, though it's been trading at these 1.4, 1.5% loss now for a while. Anand, rubber prices may be doing what they are doing, but crude prices certainly are a bit of an uptick. I don't know if all of this gets negated in terms of raw material costs for rubber companies, but when we spoke to car companies, they seem to be suggesting that tire costs and tire prices have moved up. What's your sense? I mean, I'm using MRF's price move today as a cue to talk about the tire stocks.
Well, more than anything else, I think tire companies benefited when the government decided to put anti-dumping duty on the Chinese imports. That pretty much stopped most of the imports that would have happened from that part of the world. And that really relieved the pressure in terms of the domestic market. The domestic market keeps on flattering to deceive. One has always been arguing that given the kind of volume growth that one has seen in the auto sector, there should be a time when the tire companies should do well, and perhaps now is the time. So many of the companies which have done well from benefited from the anti-dumping duty will actually do quite well, perhaps in terms of performance as well. Besides MRF, if you look at Apollo, for example, they have also been doing quite well. And some of the companies like JK Tires, etc., have also joined the party. So it seems to be across the board for the sector as a whole.
Okay, clearly the tire companies have been doing pretty well, but just from the broader market space, pull up Atul Limited. That's also seen a good run-up actually in today's trading session. Atul Limited is trading almost with gains of 10%. It's a day's high, currently quoting around the mark of 3,029. Hemen, on the charts, anything for this one?
Oh, it's been an uptrend for some time now, Navneet. If I look at the charts, it's bottomed out way back in 2009 March, and since then higher tops, higher bottoms, and to go back more, it's in an uptrend since 2001. So all-time highs, nothing much to look at in terms of negativity, but the recent high came in at around 3088 in Jain, and we've come within striking distance of that today, 3089. So and the way it's moved 10%, I think it could take a small breather over here. Yeah, if it closes above this 3088 level, Navneet, we are looking at an minimum 8% upside from here.
Minimum 8% upside from the current levels is what Hemen is suggesting on the chart. In the last 12 months, actually, the stock's only up nearly 25%. The move has just come in the last half an hour of trade, so do watch out for Atul Limited. With volumes also seem to be pretty much a decent. Anand, are you surprised the way Axis Bank has behaved today? The numbers, obviously, the slippages was something which surprised the street. But do you think now, at these levels, all the negative surrounding the bank is priced in now?
How many times have we heard this every quarter after quarter for the last perhaps 8 to 12 quarters that it is now all in the price and it is all in the numbers. I would wait to see when the numbers actually begin to turn around. There is no point in trying to anticipate it. One has always seen that whenever there is a change of management, somehow new bad loans come out of the woodworks, as it were. So while there is now clarity that the management will change, whether the new one will find new problem areas is something that we don't know yet. That said, from a purely sectoral point of view, I think corporate-facing banks at some stage have to turn around this year if we are going to live by the kind of earnings growth that the market is projecting. And therefore, you have to be looking at opportunities in the corporate-facing banks, where clearly Axis is one of the, one of those which could be targeted. My own personal preference is perhaps to look at things like State Bank, where the balance sheet size is such that it can submerge a lot more of the problems that come through.
Okay. Anand, the Maruti management just about getting ready to speak to media, so take a moment to thank you for joining us today. And let's get across to RC Bhargava as he gets ready to speak to media. I started. Let's get across.
Our growth has been 14.5%. We had forecast at the beginning of the year that we will do double-digit growth. So we managed double-digit growth. It's turned out to be 14.5. The total profit figure for the year, how much is it? 7,800. Where's the year figure? 7,722 crores, which is about 5% higher than last year. But one thing you must remember, that compared to last year, the tax rates have gone up by about 3%. Instead of 26%, now we pay 29% tax. And there have been some unforeseen or exceptional items in this year which were not present last year. For example, this mark-to-market has had an adverse impact, which doesn't really affect, because we hold the securities till maturity. But there's a lot of volatility in the quarter-to-quarter results because of the mark-to-market rule which has now come into operation. So that is something which we have to keep into account. We have also had, I think all of you are aware of this Manesar land issue which has been there for a long time. And that was finally got cleaned up, and that has had an impact of something like 250, 255 crores on the balance sheet, on the profit and loss account. So those are one-off items which have come into the picture this year. But if you leave that out, I think overall we have done better in all respects compared to last year. The market share has gone up to 50% from about 48 last year.
Plus 2.6%.
Plus 2.7%. Plus 2.7% market share has gone up. And in terms of cost impact this year, the material commodity costs, I'm not talking of components, I'm talking of just the steel, aluminium, such things which we buy. That cost itself has gone up by 700 crores this year. And think those are the main items. The royalty for the year has come down from 5.8 to 5.4%. Although in the last quarter, the royalty was hit by the yen becoming much stronger, from 0.57 to a rupee to 0.61 to a rupee. Or the other way, 0.61 yen. So that has had an adverse impact in the last quarter. But overall, it's still 5.4% compared to 5.8% in the earlier period. In the last quarter, the employee cost has shown an increase, but that also requires a little explanation because the variable pay amount which we include each quarter in the results, in the cost, used to be 300 crores. In the last quarter, this went up to 400 crores because it was decided to increase the variable pay amount. And I think these are the two major items, isn't it?
Gratuity provision because of change of...
A small amount difference in the gratuity because the gratuity provision has been changed from 10 lakhs to 20 lakhs. So that will mean another 30 crores provision for gratuity. So that's as far as the results of the year are concerned. Now the other things which I would just like to mention before you start asking questions, the dividend which we are proposing, subject to shareholders' approval, is 80 rupees per share against last year's 75. This would keep the dividend payout ratio more or less unchanged, slightly higher than last year, but just under 38%. And as you know, our scope of things is that dividend payout ratios should be under 40%. The board has approved in principle that as a part of our 35 years of partnership with Suzuki, we will set up two funds. One will be an employee welfare fund. This employee welfare fund will deal with matters relating to education, health, and infrastructure in housing colonies. Details have yet to be worked out, and the formal approval to the fund has to be obtained after the details. But in principle, the fund will be set up this year, and each year the fund will receive 1% of the net profit of the previous year. So we will transfer to the fund 1% each year. This employee welfare fund, for example, this time will get something like 77 crores for employees' welfare. We are setting up a second fund, which will be run by a trust, which is for promotion of research and scientific work in the country. And this also will receive 1% of net profit each year, net profit of the previous year, each year. And again, the details of this fund have to be worked out as to which institutions will receive, which body of people, scientists and others will decide what projects to take up and such things. So that will be worked out. But we will have this fund to promote scientific research in India, which we will...
1.76% down, 8786 and counting. Just before we get into the next management or the next stock at hand, Manav, a word on Maruti Suzuki, and would you trade it? It's the start of the series. Would you trade it?
See, at the current levels, the stock has been observing a series of decline from its highs of 9,300. Definitely, the prices are nearing its oversold zone. But I sense that the next important support level for this stock is close to 8650, 8600. So I think it still has that room for it to decline on the lower side. And looking at the near-term charts, it definitely looks weak. So for me, getting an entry today does not make sense. I think one should wait. for it to come near to its support levels where there is important support levels, and then in case if the stock reverses is when you take some buy calls at lower levels. So 8600 are the important support levels that I would want to look at least for the near term perspective.
Okay, that's Maruti Suzuki. That may not be doing well, but the big boy Reliance Industries certainly is doing well. It's expected to post a strong set of numbers for the fourth quarter as well. Refining margins, however, may have narrowed. Let's discuss the expectations with Mr. Sudeep Anand of IDBI Capital. He joins us right now on the show. Sudeep, good having you. Thanks so much for joining in. Some upticks in the run-up to Reliance Industries results as well. Summit in the morning, since the morning, has been saying that all eyes are out on what Jio does more than anything else. What are you expecting the big boy to deliver today?
Yeah, good afternoon. So we are expecting yet another strong numbers from Reliance in this quarter, where we are expecting about its EBITDA to grow by around 47% to around 180 billion rupees, while its net profit to grow by around 18% year on year to roughly about 95.4 billion rupees. However, on a sequential front, we are not expecting too much of growth, around 2% on EBITDA and 1% on net profit. This is mainly driven by your petrochemicals. So we are expecting a strong performance from petrochemicals. If you see last quarter, both polymers and polyester, but your crack spread have improved significantly. So we are expecting a EBIT margin of roughly about 17.9% for petrochemicals, which will lead to your 79% year-on-year growth in your petrochemical EBIT. However, on the refinery front, we are expecting a slightly dip to its GRM to around $11.3 per barrel against last year's same quarter of $11.5 per barrel. On Jio front, we are expecting a flattish profitability, which will be driven by your higher net subscriber addition and higher data usage, which will be offset by your slightly lower ARPU.
Sudeep, I'm just going to take that Jio contribution forward. Do you expect any sort of surprises to come by when it comes to the contribution this time around from the telecom business in the overall earnings?
So Jio actually since beginning has always given the surprise. So even if any surprise comes, then that will not be a surprise, I'll say. So but the profit, if you remember last quarter, the profitability was around 14 billion, which was EBIT, which was also a surprise. So definitely it's very difficult to gauge the kind of numbers that the company will get. So we are expecting a flattish sequential growth on profitability front.
Okay, point taken. It will be difficult to predict what sort of numbers come out with regard to that telecom vertical. But what's the rating do you guys have, Sudeep, on the stock, and what's the target price?
So we have a buy rating. It's one of our top pick in the sector with a target price of 1100 rupees.
Okay, and the stock's already touched the mark of 1,000 rupees in today's session. Sudeep, I appreciate you joining us today and giving us that heads up, and also taking us what to expect from the biggie Reliance Industries, which is likely to come out with its numbers post market hours. And the stock definitely has been on a good run up throughout the week. In fact, it also crossed the mark of 1,000 rupees in today's trading session. Well, Hemen, any call on Reliance considering it is crossed the 1,000 rupee mark?
I'd expect some profit booking. Frankly speaking, no signals for that, Navneet. We've had a brilliant run up from 880 to 1010 in 4 weeks, all-time highs. I don't know. Maybe I think whatever results could be coming is somewhere built in. So I wouldn't short it. Absolutely not. We spent 28 weeks of consolidation, Navneet. Frankly speaking, we are heading towards 1100. But after this run, I'd be very, very uncomfortable going long from here.
But don't go short either. You know what's happened to some stocks which have come out with good numbers the next day. TCS a case in point. Yes, Bank a case in point. Not next day really, but the very same day. So shorts might get trapped as well. Pertinent advice from him. Okay, before we slip into a break, let's take a look at all the key highlights of the day today.
do think that, I don't live there, but I've heard plenty of stories about how there have been a lot of execution problems and hiccups in the reforms, but you can't deny that they're there and they're happening and they are having a positive impact. And I think they will continue. I think that people vote differently on a state level than they do on a federal level, Delhi being an excellent case in point with the AAP party. So I'm not too worried about next year's election, even if BJP wins slightly less than in 2012. I think they'll continue to push through the reforms, and that's a good thing. And then the last thing is that the earnings are very robust this year. And I think since 2014, the consensus has been continually coming in too high. But what we're seeing in the most recent results is that the consensus is basically the actual results are meeting expectations. So it'd be nice if they were beating them. They're not beating them, but they're coming in line for the first time, as I said, in 4 years. And we are looking at growth in earnings in the high teens this year. So those are factors that I think. One last thing I might throw in is that you still have very strong domestic fund flow. Probably about a third or a half of that is SIP funds, which are sticky. They will continue to put money in the market regardless. So I think there are enough positives actually to outweigh the negatives that we discussed earlier, and therefore I wouldn't want to get too bearish on it.
As far as India is concerned, we've faced a lot of pressures, GST, price control, and a lot of competitive pricing pressure in the Indian market. But I think going forward, I think we can leverage a lot of what is happening globally to steady our business in India and probably get much higher market share. And probably we want to make sure that our value growth is higher than our volume growth, right? In terms of getting better realization for the business.
If we can approach our business in this fashion, then the sky is the limit. We would be building the capacity and the capability in the channels that we have, and the two major channels are banca and agency. Absolutely. We would be ramping up numbers as far as the number of workforce is concerned. We would be skilling them properly. Digital we will be taking on a high. We already have good digital presence, but we would now be making it more all-encompassing and more comprehensive, and looking the digital journey from the customer's perspective, and then to see that our own workforce, internal workforce, and our channel partners are also equipped properly. And I think that should ensure that the company does things right.
So next year's growth target then?
We have set upon ourselves a target of 30% plus growth for 18-19 as well. We want to maintain the trajectory that has been injected into the company, and to see that we take off and not slow down.
What we've seen in case of Axis is it will not be isolated simply to Axis. We expect many banks, in fact, to report losses, certainly for the quarter, and who knows, perhaps for the full year as well, on account of both catch-up provisions as well as these new norms from the RBI, which basically means that whatever was there existing with banks under the restructured book, a large part of that, we are going with the assumption of at least 50 to 60% of that book will now slip into NVLs and invite provisions in excess of 40%.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE emerge. Saath Hamara, Safalta Aapki. The SME Growth platform from India's largest stock exchange.
What if lucky discoveries could be discovered without luck? What if the secret code to investing was no longer secret? Could the complexities of business not be so complex anymore? Decode, demystify, learn. BQ Learning. Only on Bloomberg Quint.
All right, 24 minutes or 25 minutes left for the markets to shut shop. Back with countdown right here on Bloomberg Quint. And the world markets, just pull up that picture as well, just to show you what Europe is up to. Well, a mild bit of green on the screen. So nothing untoward, which is not a bad sign. We've been having a fairly steady week, and we look like we'll shut shop and on a steady note as well. Before we move any further and get in more experts on board, let's get in Yash Upadhyay, who joins in with the Fab 4 stocks of the day, and let's try and figure out what's made it to his list today. Yash, good afternoon.
Good afternoon, Neeraj. So first up, we have Kirloskar Pneumatics. Now, they reported their fourth quarter numbers. Revenues are up about 90%. EBITDA was up 170%. It tripled. EBITDA tripled from 25 crores to 76 crores. Their net profit is up about 170%. Margins too seeing a significant expansion on a year-on-year basis. So the street likes it, and it's given it a big thumbs up. Supreme Industries reported their fourth quarter numbers as well. A good set of numbers, following which CLSA, whilst maintaining the buy rating on the stock, have hiked the target price from 1,482 to 1,557, indicating a further upside in excess of 15% from these current levels as well. Sugar stocks have been under severe selling pressure over the last several trading sessions. We are seeing some bit of a short covering there. Triveni Engineering is up about 10% or so. Something like a Dalmia Bharat and Balrampur Chini are also trading higher as well. And finally, PSU banks are also up today. Syndicate Bank has snapped its longest ever losing streak. The stock had been on a downward spiral for the last 13 trading sessions. Volumes too coming in at the higher end, almost double the 20-day average. Back to you.
Okay, Yash, thanks a lot for bringing those Fab 4 stocks of the day. But from Fab 4, let's move on to the chart of the day then. The Nifty IT has been delivering negative returns in the month of April for the last 7 years. But will it break the jinx this time around? I guess it should, Amit.
It will. The Nifty IT index, if you see, has been the standout performer so far this year. The index has not only been the best sectoral performer among the sectors compiled by NSE, but more interestingly, the IT index is set to break a 7-year-old jinx. Now, the Nifty IT index is all set to give positive returns in the month of April so far, breaking the 7-year-old jinx. Now, from 2011 to 2017, if you see, in the month of April, the IT index has declined in the range of 1 to 16%. And this month, in this year, that is 2018, in month of April, so far it has gained close to 12%, giving its best April month return in the last 8 years. Now, if you see, the index has also seen its best April month return in the last 8 years, with most of the constituents of the index advancing in the month of April. Now, the top gainers include the likes of Mindtree, TCS and Tata Elxsi.
Interesting. Thanks a lot for that, Amit. If we can pull up, I can ask my producer to pull up the SCAG chart of the Nifty IT for the last 8 years. And that will show you a depiction of what it does, not just in April. I think it's an interesting point, though an easy point to guess by virtue of what it has done this month. But the SCAG will give us a glimpse of what Nifty IT has done on a month-on-month basis for a number of months. It should come up on your screen moments from now. But Nitasha, shouldn't surprise anybody with the kind of moves that some of these IT stocks have done. It seems to be a sector which has good tailwind to itself.
Absolutely. Till last year, there were a lot of headwinds which the sector was encountering, including, a weak deal pipeline, and at the same time, there was no pickup in discretionary spending as well. And US, of course, had come up with all sorts of restrictions, or rather talks of restrictions that they could have on outsourcing. But this year around, the deal pipelines have strengthened. Europe as a geography has strengthened for pretty much all of the IT companies. And if we go by how TCS and Infosys have reported their numbers, or even Persistent Systems for that matter, they've managed to beat their estimates, at least beat our estimates, and we do think that they're going to continue outperforming in the months to come.
So, it's interesting. Persistent and maybe a couple of other names would be the only ones which haven't rallied meaningfully.
Absolutely.
Whereas some of the others, NIT Tech, for example, or Mindtree, etc., have all given returns. Would you bet on the winners, or would you bet on something which hasn't rallied thus far?
So I think within the sector, we are still positive on Persistent Systems. Having said that, yes, Mindtree is one of our topics as well. But we do think that the time for outperformance from Persistent Systems is just around the corner. It should start performing well. Their FY19 outlook is still quite intact. Yes, they have gone through a few speed bumps in the recent past, but that's no reason to try and change the long-term outlook. And as long as that remains intact, the valuations remain attractive, we would still continue to remain positive on it.
Okay. Just before we move ahead, and I'm sure we want to take a stock of, I don't know if there will be too many stocks in that FNO list, but the SCAG chart that I was talking about, and if the heat map can come up, because that will show you, yeah, that's the screen. I think that's what, if you can have it on the wall as well, I think that's the screen that Sumit was referring to as well. And just look at that, month of April for the last 7 years since 2011, it's been a negative return, and 2018 turns out to be a good one. So let's wait and watch. Otherwise, we don't have too many conclusive months for IT. Maybe February typically turns out to be a good year, except for 1 or 2 instances. But yeah, April was an interesting one. It's broken a 7-year jinx, has the Nifty IT in the current calendar. Okay, Navneet, anything in the FNO space to watch out for?
Neeraj, it's just day one, so
Yeah.
I think I'll just let it pass.
No, I'm not talking about getting into the band or out of the band, but something which has shown some brisk activity today.
Hemen was mentioning there's a lot of open interest build-up that has been seen for Bank Nifty. A very important point will be whether it's all intraday trading addition that we've seen, or there is some unwinding also which takes place towards the end. Because if you could just pull up the Bank Nifty futures, and remember, majority of the contribution on Nifty that you're seeing, besides Reliance Industries, that's the other heavyweight, it's almost 24%. It's not every day that you see so much build up on a single day, and that too on day one when the volumes are usually tepid for Bank Nifty futures. Since we're on the topic of volumes, let's just see what the participation has actually been for the FNO side. That'll be pretty interesting because the volumes are usually lower on day one, and according to me, these are just about average volumes. It's not even below average, 4.5 lakh crore.
Well, yeah, but day one, I thought it would be fairly decent, no?
That's what I'm saying. It's usually average volume from the FNO space is between 5.5 to 6. We still have to wait what it will be towards the
day
end.
One as well?
Day one is usually below average is what we've seen, because the volumes are really low on day
3.5 is the number that I've typically seen on day one.
3.5 to 4, yeah. So it's slightly on the higher side.
Let's wait and watch. Cash market volumes cross 30,000 as well. What's done well today, Nitasha, are some of the tire names. Are actually, well, not some. MRF is the standout performer, and that's really zoomed. In the morning, we were talking about the strength that companies like Apollo Tyres could show as well. We haven't seen results come out as yet. What do you expect some of these companies to do?
So I think the results should be better than what we saw last year. Last year, there was a downward pressure due to natural rubber prices, which have remained more or less stable for most part of the year this year. So they should report better numbers, especially a strength on the margin side of it. Within the sector, our topic is still Balkrishna Industries. The company has managed to do a good job on the OHT space. They've managed to get through the trials on the mining side as well as on the construction side. So it's just a matter of time before they'll be able to see the orders coming in on that side, which would lead to an improvement in margins. And also the contribution on the OEM side, which is an area the company has been working on, that would aid margins as well.
Okay, that's the view in the tire space, but an alert from our research team, if you could just pull up PC Jewelers, that's fallen almost 24 to 25%. It's in the futures and options space. No, actually, it's down nearly 30%. Don't forget, this counter was down day before yesterday, almost 10 to 15% correction was seen. Yesterday also, it was down between 3 to 4% of that range. It touched its all-time high, or 52-week high, in the month of January. I remember those levels were 600, and from those levels of 600 now, PC Jewelers is quoting at about 163 rupees. It's been a huge wealth deterioration, so to say, story in terms of shareholders of PC Jewelers, Neeraj.
I mean, you know, the management has tried and come and given clarification after clarification across multiple platforms. I don't think it's quite helped this one do, have any confidence building measures, if you will.
I think the recent trigger was one of the promoter entity gifted their share to the family members. I don't know why that triggered that sort of selling pressure. That's what the clarification came about.
So the clarification was that it was a gift.
But we don't know why that happened.
Yeah, but I mean, the point, so, you know, this and a few other things, Navneet, I think it's a concoction of a number of events that have happened in PC Jewelers. The investment that one company made, I think, in PC Jewelers as well. So all of those factors lead one to believe, not have confidence in probably companies, as good as a company that PC Jewelers may be. And maybe Nitasha has a view here. I'm sure Yatin has spoken to a few dealers as well. So let's get all of that into perspective. 27% down currently. 44 million shares, by the way, traded already on PC Jewelers. That's not small volume. It's fairly high volume as well. Yatin, any buzz on PC Jewelers? We're talking about what dealing rooms are recommending, but anything that you heard on PC Jewelers?
Well, you know, dealers in general have been shorting and trading, you know, on the counter. And if you look at PC Jewelers, it is known to give you wild moves. Once in intraday, it will go down 20%, recover that 20%. So, you know, in terms of volatility, it's quite a volatile stock. And today's move clearly suggests that, almost 30% down on an intraday basis, and the 5-7% swings that the stock gives randomly is something wherein small retail investors and speculators should be wary of, because these are the typical stocks wherein, the cost of trading could be much higher, and the probability of you losing the money is also higher given the volatility in such stocks. So the probable advice is to stay away in all of these stocks having huge volatility, especially in the future and option segment.
Yeah, well, before we get to dealers, then Nitasha, any thoughts? PC Jewelers?
Not really.
Not really. Yeah, safe to not have thoughts as well. But yeah, look, and while Yatin was speaking, the volumes have moved up from 44 million to 46 million. It's 45.81 million. The pace at which the trading is happening in PC Jewelers is not funny. And look at that bump up in volumes as well. Just be very, very careful if you're trading this one, to be honest.
Heavy selling is what is being indicated on the cash side, because futures for the last 3-4 sessions, Neeraj, there was heavy shorting seen at every level by the traders.
Well, so suffice to say, a stock in focus. Okay, let's try and figure out what dealing rooms are recommending in the session today. I want to ask Manav Chopra to take a guess on PC Jewelers. It will be a punt at best, so we'll avoid that. But Yatin, what are dealing rooms recommending?
Neeraj, Shriram Transport, that is one company which came out with results a few minutes back. Dealers are indicating that, the change in accounting policy, and they have moved their NPA recognition from 120 days to 90 days, and probably that has resulted to slightly weak results. But existing for that, dealers expect that the stock should do well. So this is one stock was almost 70-80 rupees down, but has recovered smartly in trade. Also, FMCG is one pack that we were talking about. Nestle, HUL, all of these stocks were doing well. ITC is also catching up as domestic funds are set to be buyers here. So dealers expect the positive momentum to continue as far as this FMCG major is concerned. And watch out for Prakash Industries, as HNIs have been lapping up shares from the open market today. Almost 32.5 lakh shares traded there. And dealers expect the momentum on the upside to continue for this company.
Interesting. Okay, thanks a lot for that, Yatin. So 2 or 3 names to watch out for. Shriram Transport Finance. There's a Motilal Oswal note as well, which speaks about maybe, just maybe, adjusted for one-offs, it's a strong performance in the quarter. Do you guys track Shriram Transport, Nitasha?
We do, but we do not. We're neutral on it. Not really have a buy recommendation as of now. In fact, in the entire NBFC space, we prefer to stay away from it right now.
Oh, really?
Because we have seen that the bond yields have strengthened, and that would put a downward pressure on the NIMs across the board for all the NBFCs. And at the same time, the kind of traction that we're seeing on the interest income side may not be able to offset that decline. So we would prefer to stay away from them right now.
So not even a Bajaj Finance, not even a Capital
Nothing.
First. Wow. No NBFCs. What about Ujjivan and Equitas? I think Equitas comes out with numbers today.
Equitas we have been positive on for a while, but at the current levels would not suggest a buy, purely because it has already pricing in all the near-term upside, unless and until they surprise in the numbers later on. We think it's already pricing in every kind of an upside. So if there is a correction, one could look to accumulate it.
Interesting. Yeah, in Equitas, watch out for the cost-to-income ratio. I think that's been elevated. The management has taken a lot of hits out there in the recent past. If they manage to bring that down or give guidance for that, could be an interesting one. Okay, time now to get in some closing strategies from our experts. Firstly, Manav, to you, what is your top closing strategy?
See, at the current levels, I like two stocks, out of which first is Apollo Tyres. The stock has actually seen a very good breakout today, and it has managed to exceed its, last 4 to 5 trading session high, and it's closing above its crucial levels of 290. Volumes are also suggesting a good build-up in the momentum. I think going forward, the stock can be a good BTST and also a good trading bet for a near-term perspective. On the lower side, 286 can be the stop loss for this for an upside target of 305. The other stock I like is SBI. The stock has seen a very good reversal from its important crucial weekly support levels and has seen a good bounce from its oversold levels. I think SBI could be the leader for the Bank Nifty going forward, at least in next couple of trading session, and a very good risk reward even at the current levels. A stop of 236 is recommended for an upside target of 250.
Okay. I'm told the management of PC Jewellers is with us, so just take a quick perspective there as well. Mr. Balram Garg, he's the MD of the company, joins us on the phone line. Mr. Garg, thank you so much for joining in. You've given part clarifications about the promoter holding a couple of days back. Anything else that's happened in the recent past, either by way of gifts or some other transfers that could have led the market to be so nervous about it?
Nothing is pending. Whatever is there, we have given clarification. Apart from that, nothing is there.
Nothing's happened today, you are saying?
Yeah. Nothing has happened today, yesterday, before yesterday, nothing. I'm
sure you've tried to, in your own sweet way, speak to market participants to try and figure out what is it that is making the market so nervous. I mean, so 50 million shares traded.
We are also figuring, because as far as business is concerned, we are doing very good, and we are on regular basis. This month we have won 2 stores. Next month we are opening another 2 stores. Regular basis, March we opened 7 stores. So business-wise there is nothing, and we are trying to talk to the investors what is happening, and right now we don't know about who is selling, what is happening, and nothing change in the company. Company is doing very good. So there is no change in the company.
Mr. Garg, it's quite surprising. Your stock price has fallen from 600 rupees, which was seen in the month of January. You're also suggesting you don't know who's selling your shares. If I'm not mistaken, every promoter or a company on daily basis gets a report from the stock exchanges with the list of the names.
We have given the shareholding pattern. Just see. Every quarter we have to give.
Mr. Garg, I'm not talking about the shareholding pattern. Just because the price has fallen, I'm sure you would be investigating. If I'm not wrong, I think it's a norm. Every promoter, every management gets a daily report from the stock exchange where you can find the buyer and seller.
Not daily report, weekly report we get.
Fair enough, weekly report.
Yeah, weekly report. So when we got the report, because the sudden fall came in last 3 days only. So we are figuring out, and when we got the report, we got to know who is selling. So I can't say right now who is selling, but definitely we are also trying to contact exchanges, and so we are talking to the compliance also what to do, because nothing changes the company.
So everything's fine with the business? Will the numbers be same what one saw in the previous quarter?
Every time we are giving the disclosure when we open the stores, and just see on the regular basis we are opening stores, and there's nothing change in the company. No change, nothing, zero change.
Any kind of debt positions that are open, any pledged shares?
No, nothing. There is no no pledge of the shares, and there is no increment of debt. Nothing is there.
Okay, what's the current promoter holding, considering all the gifts that have been given by non-active promoters as well? What was the promoter holding in Jan, and what's the current promoter holding, Mr. Garg?
Actually, as far as you just see the April shareholding which we disclosed, is around 60% for the shareholding.
And it's come down a little bit, right?
It come down, but only around 2%, I think, given the gift by the family member.
Do you think that there is an outside chance that due to some personal fundraising issues or otherwise the promoter shareholding could go down from the current levels?
No. There is no chance to come down.
You are sure that the promoter shareholding will stay northwards of 60% in calendar year 18?
But whatever shareholding is today, definitely whatever shareholding we have given, that will be continued.
And none of this is pledged?
Have not sold, in past also they have not sold any share, and future they don't have any plan to sell share.
And none of this is pledged?
Yeah. Nothing is pledged. Nothing is pledged.
Okay. Who's been selling, Mr. Garg? You said that you know the names. You don't want to say, but is this what? An institution holding? Is it a set of traders who are doing this?
I think we have to investigate. Our team is investigating right now, and we have definitely...
I know you can't give me names because you mentioned you don't want to share the names, but surely you have a sense of what's the nature of the entities.
Right now, actually, we are also investigating.
Okay.
And so right now we are also investigating.
Fair call. Mr. Garg, do fill in the exchanges in with the investigation outcome once you get them, and all the best.
Definitely. Sure. Thank you.
Okay, that's PC Jewelers. The less said about this, the better. The stock is under a bit of a free fall. Just be careful before you trade. This one is all I can say. Okay, let's not dwell too much on this. There's a market beyond PC Jewelers which is down, which is not down, because the Nifty Bank is still up about 1.63% higher. Nitasha, if you had to own a bank, by the way, Axis Bank is up 10%. If you had to own a private sector bank, what would you buy?
HDFC Bank, even today.
Even today?
You talk to anybody, Neeraj, it's either HDFC Bank or HDFC Live.
Right. So I think we've been positive on HDFC Bank, and within the mid-cap space, it would be RBL Bank. That's pretty much it.
That's coming out of the numbers today, right?
Yes.
What do you expect it to do?
So we think that, yes, the NPA level could inch up a bit, given that this is Q4 and traditionally we have seen a bit of an NPA issue coming in. But besides that, it is a strong bank. It's a young bank even now. It's a strong bank. They have done quite well and they've made a niche for themselves, and that would help to, deliver long-term returns for them. And even in terms of valuations, they look quite attractive at current levels. So it's HDFC Bank and RBL Bank, which would be a definite buy right now.
Okay, I think we haven't taken closing strategies, so need to take them. And Manav, thanks so much for being patient with us today. But a couple of interviews and therefore couldn't do justice. But let's get in our top closing strategy from both Manav Chopra and Hemen. Manav, to you first. Your top closing strategy today.
See, at the current levels, I've already mentioned about Apollo and SBI, but there is another stock which is looking good is Hindustan Zinc. It has given a good breakout, and from the sideways action, I think the stock still has a good upside. At the current levels, the momentum indicators have entered into a buy mode, so I think this is a good buy, at least for next couple of trading sessions. The stop loss can be placed at 325 for an upside of 340.45, and from the tire space, I think Apollo Tire looks really good even at the current levels. I sense that one can see a good upside of at least 5 to 6% in a very short term.
Tire stocks are doing well. Hemen, similarly, couldn't talk too much in the second half of trade, but one top closing strategy?
BTST on ACC.
BTST on ACC. Okay. Manav, take a moment to thank you. But Apollo Tires and ACC are the two ideas that have come in from our experts. Manav, thanks so much for joining in today. Have a good weekend. Just before we start wrapping up the markets, Nitasha, a quick thought on, or maybe we'll take Nitasha's idea in detail after the break. I think you have a buy on Century Ply.
That's right.
So is it a whole plywood game or is it only Century Ply individually?
We have it on the entire plywood game. Century Ply is definitely our top pick over there.
All right, we'll get to the rationale of that post the market closing. Century Ply in today's session has seen some bit of correction, but overall, it's turning out to be a good closing, so to say, just 3 or 4 points below the 10,700 mark. But overall, it's been a great week for the markets for both Nifty and how Bank Nifty is bounced back in today's session. Let's head across to Neeraj to find out how exactly exactly today's closing is panning out, Neeraj?
So the bulls are smiling almost every single day. I don't remember the last time I stood here and we had a big red on the screen. So it's good going. 0.7% up for the Nifty. The Nifty Bank 1.6% as well. The mid caps and the small caps, remember they started off better than what the large caps did. But during the course of the day, I think the large caps have eclipsed the performance of the mid cap and the small cap indices. So let's see what's done well and what hasn't. Banks all the way. Axis Bank, wow, 10% higher. It's similar to what Yes Bank did yesterday. Just that at the risk of sounding like a broken record, Axis is doing it after delivering a poor quarter. SBI about 4%, ICICI Bank 3.5%. HPCL interestingly has had a good move, and the big boy ahead of the numbers 2.5% higher. We're not surprised really. Not too many people would have gone down and shorted Reliance from the levels that it was trading at throughout the trading day. You don't want to go into a Reliance result short considering the reactions that the market is giving to good numbers. What's lost? It's IT by and large. So HCL, TCS, Tech Mahindra, all of them are down, and Maruti post its numbers is trading currently at the lowest point of the day. But now, broader markets, sea of action, not necessarily limited to PC Jewelers.
That's right, Neeraj. There were stocks which were also locked in upper circuit. So let me start off with that. GKW Limited, second straight day of upper circuit coming in for this counter, up 20%. And remember, the circuit came in just around the opening time. Pioneer Distilleries also did pretty well. In fact, the entire space has been doing good. You also had something like United Breweries, which went up in today's session. Pioneer also locked in upper circuit with gains of 20%. Astron Paper, that rose, I guess, in the second half of the session. That too had a great day and closing with good amount of gains. Some bit of bounce back seen for the sugar pack. Triveni Engineering was up and about, and clearly today's contribution came in from the banking stocks. So something like from the PSU banking space, Andhra Bank, Oriental Bank, both of them saw substantial gains in today's trade. And tire stocks, MRF, that touched its all-time high levels. Not only that, it crossed the 80,000 rupee mark in today's session, suggesting some bit of buying continued in the tire pack and also closing around the day's high mark for MRF. On the losing side, PC Jewelers, one of the top F&O losers for the day, 25 or 26%. It's closing around 28% lower. Indigo, there was some selling pressure seen for Indigo also actually. That one slipped by nearly 6% in trade. Rallis reacted negatively, obviously, to poor set of numbers. So that also saw some selling pressure, closing around the day's low mark. And it's not been a great week for Reliance Naval. Remember, this company will be coming out of the futures and options space with effect from June series. So that also closing around the day's low mark with cuts of 7%.
Well, all in all, a very good close, not just for the day, but for the week as well. Just very quickly, the performance of the week before we get back to our experts and then get to the market wrap as well. This is the weekly performance. The Nifty 1.24%, but look at it. Banks have made a bit of a comeback. Yes Bank and Axis Bank and IndusInd Bank too, up about 4%. Kotak Bank about 3.5%, and it's been one of the better performing stocks for the series, by the way. Really good performance. Reliance Industries has given support, and it's only because technology has taken a bit of a backseat. Select names in the commodity space have taken a backseat, which is why you don't have a really strong performance from the market at large. It's just about 1.25%, despite Reliance Industries being up 7% and banks not doing all that poorly. I mean, had IT not succumbed to selling pressure, it could have been a much more remarkable performance.
Yeah. That's right. But you did have heavyweights featured in that list, Neeraj. For example, Reliance Industries. Let's see if the numbers turn out to be good. We could see further gains coming up for Reliance Industries. But on the losing side, Hindalco, I think all these metal counters which were going up because of that aluminum news, they succumbed to selling pressure. Hindalco was down 10%. Tata Steel also features in that list. So metal stocks came under pressure. And obviously, IT was the other pack. Vedanta was too down, nearly 5%.
Interesting set of names today, and good trade per se in today's session. Final thoughts from our experts really, and Hemen, to you first. From where we are right now, is it difficult to make a bull call? I mean, let's say Reliance comes out with a good set of numbers which beats the street estimates ever so marginally. What do you think happens to the indices in the course of the next few days then?
We'd open, gap up, walk into resistance and get heavy, the way I look at it, Neeraj.
And would that be the position for the markets at large as well? I mean, that's one Reliance, but what does it do to the markets?
Frankly speaking, now 10,630 becomes a stop loss in case of positions. Things are fine. There's this gap which we've almost covered. One would have to need to wait and check the open interest data, Neeraj. Otherwise, we seem nicely poised. There have been many stocks in sector which have done well. So I'd be positive with a hint of caution. One would need to wait for the Bhav Coffee for the exact figures to come in. But yeah, it seems fine. 10.7 has come. There is headroom till 10.850. But are we going to see a hiccup before that? That's what you wait and see.
Okay. Hemen, okay, just before we actually wrap up this show as well, I know viewers were waiting for some ideas to invest in when the markets are at these levels. You want to invest but not quite sure of what to do or where to invest. Why a Century Ply?
So it has been the market leader within the plywood space, and the entire plywood space we think would benefit from two things. One is of course the introduction of GST, due to which the price differential which typically existed between the organized or the branded laminates and plywood players as well as the non-branded unorganized market, that differential would start narrowing down, which is when the trade-off between using a branded player and the non-branded player really doesn't stay. So you would find a lot more people using the branded plywood as well as the laminates. Second, the MDF markets as well as the laminates market has done outperformed the overall plywood industry in the recent past. And if you really look at Century Ply, they've managed to deliver a top line growth of about 20 to 25% over the last 5 to 10 years, despite the fact that plywood went through all the problems that it did. Despite that, the company was able to post a decent set of numbers. So we think that the ROIC as well as the earnings are only set to improve further. Yes, probably the last quarter was a bit of a disappointment as far as the pickup in demand on MDF side was concerned, but we think that going forward that would improve as well, both from the commercial real estate space as well as from the residential space, and Century Ply can deliver returns of about 17 to 18%. That's our top pick within the sector.
Wow. Nitasha, I'll just stay on. Actually, there are a few questions on our social pages, but gentlemen, we'll have to take it some on the Monday show because UPL numbers are out. I just need to dissect them for a moment. Maybe Nitasha has a view here, but net profit at 736 crores. The Bloomberg estimate was 772, marginally off, I would say. Revenues as well don't seem to be too off. 5690 was the reported number, and I think the estimates were somewhere around those numbers too.
5,900.
Yeah, so both on the revenue and the bottom line front, marginally off is UPL. It's been a steady stock, now an index name as well, Nitasha. What do you make of these numbers?
Topic within the large cap space for us. So we think that the company has performed well. Yes, it is meeting our estimates actually at this number.
Your numbers were around 7.5? Around
that level. So I don't remember the exact thing. I think they're just off by about 0.5% or just 1%. So we're quite happy with the numbers that have come out. Valuations are attractive, and if the forecast for normal monsoons continue, at least for India as well as the rest of the world, because UPL does have a lot of presence in the rest of the geographies as well. If that continues to work, then the stock should continue its performance as well.
Interesting. So that's the update. I don't know if you're catching anything else, Amit, but that's the key basic update. As per the Bloomberg consensus, the numbers are missed estimates. Nitasha, Shankar shares it almost meets their estimates. Nitasha, Hemen, thank you so much for joining in today and giving us your perspectives. Anything else, Amit?
I think there was an exchange gain which has been seen during the quarter of nearly 200 crores. Yeah, I think that's a gain itself. So despite of that, I think the bottom line has not been in line with what the street was estimating. Other than that, I think more or less the numbers on year-on-year basis for majority of the particulars that you see in the P&L account, they seem to be the same only, Neeraj. You've got the employee cost, which is just about the same, no major change seen there. Cost of materials, that's risen substantially, I would call it, sequentially, Neeraj. I think 2,900 versus 1,900, which was seen in the December quarter. So some clarity definitely with regard to sequential increase in the cost of materials. Other than that, I think it's just a slight miss that we've seen on top line or bottom line.
Well, that's the view on, that's the final analysis on UPL. Let's see if the stock has any kind of a major reaction in Monday's session. But it's been a good week, so let's wrap it up on this leg. But if you have some reasons to know what's happened in the day and the week as well, the Bloomberg Quint Market Wrap is coming up on the other side, so do tune in for that. Thanks so much for watching this leg of Countdown.